What's up, you guys? Welcome to Financial Firefly. My name is Fernando, and this is our journey through FIRE, Financial Independence Retired Early. This is the weekly recap of my M1 Finance dividend growth portfolio, where I safely dollar cost average in over time. And then we'll go over my Robinhood portfolio, which is my actively traded fund, where I take on much greater risk via margin and leverage with options. And we will get into those, the happenings of which are a lot of trading, rebalancing, some doubling down, and really just big net gains. So we will definitely jump into that. But before we shall just get into some news of the macro market about Biden being inaugurated and elected president, what that means for the markets, potentially $1.9 trillion stimulus package, Elon Musk becoming the richest person in the world, back and forth with Jeff Bezos, but doing a little bit more good with that, let's say. Then finally, don't forget to pick up your 4 free stocks from Webull and M1 Finance. If you deposit $30 or $100, you get $30, I get $30, and the other free stocks with Robinhood and Webull. If you want to support the channel, sign up, get invested for the companies of our generation, guys. This is long-term plays, building wealth over time. This isn't overnight success. A little bit in my Robinhood portfolio should be up there, but that's the risk and the leverage and the reward that comes along with that. So let's get started. Alrighty, jumping into the news for the week. Just some Biden news and the macro environment that Biden has been inaugurated as president of the United States. And what does this mean? So, Democrats are in office. They're a little bit more free with their money and their handouts, not so much hand ups, I'm sure, as the right-wing conservatives would like, but the two-party system is flawed to begin with. Enough about politics. What does this mean for the markets and my portfolio? Well, travel bans are being reinstated for Brazil, UK, and much of Europe, potentially South Africa. Increased risk there as far as airlines and travel stocks goes, but apparently JetBlue is now filling the middle seat on airplanes. So we will see what that does for rates. I don't think COVID rates will go up substantially from that, but we'll keep an eye on it. And then in further Biden news, executive orders up the wazoo. So he signs executive orders on stimulus, checks, food stamps, and a minimum wage. The minimum wage being a little bit controversial based on where you are in the country. $15 for small businesses in Wisconsin are a lot different than small businesses in New York. Cost of living proportional to a $15 minimum wage is tremendously spread from where you are in the country. Further along those lines, with the stimulus of the $1.9 trillion COVID relief plan, it's a little bit unclear whether it will garner enough Republican support to pass on a bipartisan basis, according to this article from CBS News, but I think something will end up passing, and that will just increase inflation a little bit more, further increasing hedges into Bitcoin and cryptocurrencies and assets as store of value. And talking about store of value and assets, we have our Lord and Savior, Elon Musk. So Elon Musk was jiving and jostling with Jeff Bezos for this week of the position of richest man in the world. Elon Musk is now donating $100 million to find the best carbon capture technology, which ironically enough, we already have. If you want to take a guess, trees and seaweed and grass and photosynthesis. If we can discover how to speed up photosynthesis, not only will that impact our food supply globally, but we can increase carbon capture while increasing the net organic matter on Earth, which I think would be a pretty amazing thing, especially with AI imaging and DNA sequencing with CRISPR and cost reductions there. So something to keep an eye on, but I thought this was really cool that now the richest man in the world, who's also doing the most to benefit humanity, is now directly holding a $100 million prize, which is, to my knowledge, the biggest prize on the planet right now, aside from a lottery, to really invest in research, prove out, scale, and expand, eventually at scale, carbon capture technology, which we all know is crucial for global warming. Moving on, I'm going to post a link to Dave Lee's interview with Jason DeBolt. The 39-year-old man now worth $12 million because he bought Tesla shares at $7.50. He is an ex-Googler, Google engineer, looks like a really smart guy, lives out in California, born out in the South Bay area. And, it's a really good interview with him and just seeing his super, super strong conviction in Tesla. And he thinks, net present value is about $3,500 a share, which is, triple street average. But bull case, I think, is warranted. And when you have conviction like that, you really, anything is possible, especially with Elon Musk. Like, he tends to deliver. So I thought that was really cool. Definitely check out this interview with Dave Lee interviewing Jason DeBolt. And also, all of Dave Lee's interviews are just fantastic. They really go in depth, under the surface, well thought out stream of consciousness. Getting into some other news with Arcimoto now. Look at this. Galley Russell from Hyperchain. Shout out Galley. Definitely check out Galley's channel. Galley is like my fucking hype man. I love Galley so much. We are best friends, and he has no idea. I mean, he has a million friends. But I love Galley so much. He is just all about it. And really the news here is that Galley is now a board member of Arcimoto. Arcimoto Motors, they've been talking and scheming as Galley does. He has a bunch of great ideas, and he's like, yo, you gotta get like testimonials in your vehicles. You gotta bring people to factory visits, like show them what the vision's about. And having Galley on the board of Arcimoto is such a fucking brilliant move, honestly, that they're getting new blood in here, fresh eyes on the product. And look at the smile. I mean, like, Galley's just such a genuine dude. He's all about it. He's all in, and he's just a brilliant finance guy. And I love listening to him. It's funny because Tesla, Rob from Tesla Daily commenting like dope at Arcimoto. Like, being on the outside and watching all this is super fun to see these people that are my age, right? Our age, really leading the way and revolutionizing the industry in their vision. And I'll go into some much more macro forcing functions at play here in different videos, but this is really something to keep an eye on. Galley, who is the creator of Hypercharts, highly recommended stock site, amazing analytics here. Let's just go into Tesla for a sec, but you have quarterly metrics and annual metrics, and like that's just insane. And look, adding the new product that they're adding is doing really well. So then you have energy sectors, we're in the tens of billions already, gross profit, revenue, and operating income. Hypercharts, highly recommended. Check it out. I'm definitely going to sub at one point while it's still $100 a year, get locked in that price, because Galley likes to lock in his customers early, and that's an incentive to do that. Anyway, go Galley. I doubled down on my position in Arcimoto, so I'm super, super bullish on Arcimoto. Galley being appointed a board member is a brilliant move by the company. I just see it going up from here, so I doubled down, and I will continue to dollar cost average into them in my M1 Finance portfolio, which we will get to in a second after I say this last headline for the day. Boeing commits to deliver commercial airplanes ready to fly on 100% sustainable fuels. This came out January 22nd, 2021. It's now the 24th. But interestingly enough, an article came out the same day on Electrek. Boeing says it will deliver 100% biofuel planes by 2030. And that's really interesting that they emphasize in this article that came out at 6 p.m. on the same day, biofuels. I guess that might mean, sustainable fuels in default, but now they specifically expressed biofuels, which is super interesting because last year my actual largest gain in my portfolio was a sustainable fuels company, specifically in biofuels, Renewable Energy Group. I thought they were a solar play, battery play, renewable play. Honestly, when I set up my M1 Finance portfolio, we will actually just go into this now, Renewable Energy Group, 757%. What is that? What does that mean? And so I started thinking about this, and this is actually something really, really interesting when you think about what's going on with the transition to sustainable energy, is that we have an existing fleet based on hydrocarbons, that the energy consumption, the source that they need, the fuel is hydrocarbons. Well, if you can source hydrocarbons from sustainable sources that you already grow, i.e. corn and maybe wheat or something, I think it's mostly corn, you can use the byproducts of that corn, hopefully for something else. The existing fleet of, say, 400 million cars worldwide that run on hydrocarbon and fossil fuels will now be easily transitioned over to sustainable, renewable hydrocarbon fuels. So you don't actually need to transition the full fleet to electric immediately. You have this intermediary of sustainable biofuels that are now going to play a huge role in this transition. And Renewable Energy Group, the return just based on this one holding speaks for itself. 757% is a money-weighted return, a little complicated of a formula rather than just a simple gain return. But, $883 in value, $463 gain, that really is over doubling my money, which is pretty cool. All right, so I guess this is a good segue into my M1 Finance weekly recap, which I really need to start getting shorter here because I just tend to rant on. But so I'm at $28,000, which is pretty dang cool. But this week I got my M1 card. I started borrowing, actually. So now I'm borrowing $5,050 at 2% annually, which my next projected bill in a couple of weeks will be $3 and $3.90 to borrow $5,000, which I think is pretty amazing, especially because I got a year free of M1 Plus, which is a reduced borrow rate from 3.5% to 2%. So I'm saving 1.5%, but it's already paid for itself, and there's no payoff period. On top of which, my credit limit increases as my equity in my main portfolio increases. So when I first started borrowing money, I had a credit limit of 30%, which would equal $6,800 I could borrow up to. But then I started borrowing, I started gaining more equity in my main portfolio up to, $23,000. Now I'm up to 24 something and change. 30% of that is now $9,900. So I'm able to continue to build leverage, and that leverage is helping me build equity to build more leverage. So I'm able to now leverage my passive income portfolio, take more risk, more return, because high conviction. Obviously more risk on this, and as you can see here, in the last week I really just shot at $5,000, if not more, $21,000 to $28,000. So $5,000 on margin. $2,000 essentially of this was from my portfolio gain. So in the last week, almost 20% in the month, cut that in half. So we're looking at 10% within the last week or so. Is it sustainable? Obviously not. This has to come back down to earth. There's going to be a doozy of a correction here. Be really cautious on the risks that you're taking. But just a quick overview of my portfolio, because this is now already a 20-minute video and I've been talking forever really fast. We have ARK Invest at 33%, Tesla at 20%, Apple 10%, Renewable Energy at 10%, Technology 10%, Microsoft 10%, Consumer Evolution 3%, Finance at 3%, and Cannabis at 1%. If you noticed, these are all emerging market sectors, so to speak. So ARK Invest, we have genomic revolution, autonomous technology, next generation internet, innovation, and financial innovation, and soon to be ARK-X, space exploration. So we'll see. We will definitely be adding into ARK-X substantially when that happens. So Tesla, Apple, self-explanatory. Renewable Energy, we spoke about Renewable Energy Group. In this portfolio, I really don't want to be touching anything that's not 20% or more year over year. It's just not my strategy. I think that the world is accelerating and transitioning so fast that due to Moore's law giving way to Wright's law now, costs are declining so fast and rapidly that renewables are the number one lowest cost way to produce energy, and there's no holding it back. So my technology pie focused on the big tech plays and growing here with a little bit of dividends, capital appreciation. Tesla, Apple again, Amazon, Nvidia, Microsoft again, Virgin, Facebook, and Alphabet. The reason why I carry so much Microsoft and Apple is because they're, the market leaders, and they pay out dividends. They're the golden geese. Microsoft, again, consumer evolution, focusing on different consumer trends. As you can see here, I have Arcimoto, Dashdoor, Airbnb, Beyond Meat, growth generation, vertical hydroponics, which I think is going to absolutely explode soon, and Shopify, where people are spending their money more, increasingly so. Whereas some of the traditional plays, Johnson & Johnson, Procter & Gamble, are, say, market saturated, and they're not really going anywhere. They're not really investing or doing anything. Finance, Square, PayPal, JP Morgan, Visa, and Lemonade. My high convictions here, I mean, they're all high conviction, but the growth plays really being Square, PayPal, and Lemonade. Soon we'll add SoFi into this pie once Chamath takes that public with a SPAC IPOE. I bought 100 shares, and I think I'd actually doubled down to 200 shares the other day, which is in my Robinhood portfolio. SoFi is a one-stop shop financial app. And then finally here, cannabis. Cannabis has been doing super well, and I think it will continue to do super well in a Biden administration. Biden is very green energy focused, so I think green energy is a huge plus in the economy this year that we should look forward to. So we have Afria, Tilray, Canopy Growth, Kronos, and ETFMG Alternative Harvest, broad market exposure with this fund here. Alrighty, so basically to round this up, this is my dividend growth portfolio with M1 Finance, link in the description. I'm at 28,000 from roughly 21,000 at the beginning of 2 weeks ago. I am now starting to dollar cost average in a leveraged position, meaning I am borrowing, thus increasing my gains, enabling me to borrow more to increase my gains further. More risk, more reward, more compounding earlier for more growth later. We'll see how this works out. And now moving on here to the really big winner. So look at this. Robinhood, my actively traded portfolio now. I started 3 months ago, October 31st at $13,000. And then Tesla calls got me all the way up to now $64,000 we settled at. I hit $70,000 at one point briefly, 69. I definitely should have taken my gains here, been a little bit more conservative, taken some risk off the table. The way Robinhood does their chart is a little inaccurate sometimes. But the overall thing here with my Robinhood portfolio now is rather than borrowing at 30% of your equity, Robinhood, I think you can borrow up to 100% of your equity. So a lot more risk. My buying power right now is $10,000. I had it set so I can borrow 40. The caveat here is that stocks are independently marginable, or they have independent margin requirements, maintenance requirements. So Tesla, for instance, I tried looking at this through Robinhood, and I can actually see the margin percentage. So buying power available, let's just see here. So for Tesla, 9,700 buying power. If I go into options, I only have 5,000. See, so the maintenance requirement, the margin on maintenance requirement on a Tesla call is about 40% at least, which is actually what I'm looking into for earnings this week. But all my capital is tied up in these two Amazon calls, which were the majority of the gain over the last week or so. So I was at that $13,000. Let's just go back for a second. Sorry, jumping around here, talking a million miles an hour. All right, so the 1 month view is actually relatively accurate. So $46,000 about a week or two ago, and then bam, my Amazon calls that I've been sitting on since the insurrection, actually. So I hit all-time highs at 58,000 in December. I bought some Amazon calls. The insurrection happened, the uncertainty mounted, and the markets tanked a little bit. Then Biden gets inaugurated. Amazon announces help with vaccine distribution and administration. Within 2 days, my portfolio goes from $47,000 to $70,000, $69,000 settling at $64,000. So it just goes to show you the scary power of double leverage, using margin to buy options, and the possibilities with this. And I will continue to do this. This is the strategy of this portfolio. I'm still down $6,000 on my first Amazon buy. I bought these calls to play the strong holiday earnings seasons, in addition to playing the transition to a digital-first online economy. That online retail sales are booming, absolutely booming. I mean, the news is that Apple's supposed to have the first $100 billion revenue quarter. What? I don't know. That sounds ridiculous, but it's possible, and it might be an industry trend. So these tech plays, these FANG monsters, they are the economy at this point. They employ hundreds of thousands of people and make millions and billions of dollars and distribute that around the economies of the globe. Not to mention investment in innovation and all that, especially Tesla and Amazon, and now Apple with their new M1 chip. You really have to look at all these pieces and saying, where's the world going? Where are we headed? What are the implications, and what can I do? What contribution can I make? And I have some theories on that. My YouTube channel is obviously part of this. I hope you guys enjoyed this video. Be sure to like, subscribe, smash all the buttons. Give me your feedback. What do you want to hear about? What do you want to talk about? Let's discuss. Let's build a little bit of a community around this, because I'm trying to get in the personal finance community space. And I'm a little bit intimidated by, like Stephen Mark Ryan and all these millionaires and Graham Stephan and Andre Jick. And oh my God, I love these guys. They really got me into this space. But man, maybe I'm comparing myself too much. Let me know what you think. I'll catch you guys later. Peace.